break this resistance level. You can see targets were reiterated. Potential entry could be anything on dips maybe to near 60 cents. 12th of July, we got a bullish signal. You see it has gone up. Over the past few months, we have seen strength in the Singapore banks, leading the STI to a multi-year high. But what about some other small cap stocks that have came into our watch list over the past few weeks or past few months, whereby there could potentially be more upside? Hey guys, Joey here, top tier MyZale trader in Phillip Securities, and in this video, I'll be sharing with you guys just two Singapore stocks that have came into my watch list over the past few weeks, and they have broken some of the very key resistance level. They are already in a very firm uptrend, and some targets were actually drawn. So we look at what happens over the past few weeks, and more importantly, where we are right now, and what potentially can be done right now, and what are some of the new targets. So if you want to know what are these two Singapore stocks, make sure you watch this video all the way to the end. Let's go. So the first Singapore stock I'll share with you will be this company called Dynamac, right? It came to my watch list over the past weeks because we were approaching this very key resistance level. So this was a screenshot that was done just early of July. You can see we were trading below this 0.44 or 0.45 resistance level, and some upside targets were drawn because we were in a very firm uptrend. There were a potential that we may actually break this resistance level. So it was right around here at about 0.435, and a few days later what happens was we actually managed to break this resistance level. You can see targets were reiterated again all the way to about 0.55 cents. So it's very firm uptrend. Trend indicators were all pointing up, and finally that move that we were kind of envisioned that will happen soon, it did happen. You can see right over here it broke and upside targets were reiterated. So let's take a look at where we are right now, and more importantly, could there actually be more upside, and what are some of the new support levels that came out over the past 3 to 4 weeks. So this is Dynamac at about 0.555 right over here. So yes, hit our targets, but more importantly, can there be more upside? So as I mentioned, right, we were actually trading below this very key resistance level since last year. Look at this, right? We touched about 0.4445, neared it, came back down, and finally, I mentioned that when we broke this resistance about 44, upside targets were drawn, as I mentioned just now in a screenshot, right? So we kind of alerted some of our VIP clients in Phillip Securities as well. All right, some upside targets were drawn. There's a little description that we sent to our clients. And more importantly, you can see that the 20 days moving average, we had actually this 20 days moving average, the green line, it was actually flattening out. So it was a bit of a consolidation since May, June, a bit of a sideways movement from about 0.33 to 0.44. Look at this, right? It was pretty much just swinging up and down, up and down. And finally, right, that move came and we broke that 44. You can see 20 days moving average line started to slope up. So the short-term trend turned up, a bit more firmer. Longer-term trend also started to turn up. I would say somewhere since May, there were signs of the longer-term uptrend turning up as well. All right. So what could be the potential move be right now? I mean, if you have got in, what could be some targets whereby some selling can actually happen? Well, I would say that the support level would be around 0.44 to 0.45 right now, but it seems like over the past 2 weeks, we have found another higher support, maybe around that 0.48 level. So it was consolidating over the past 2 weeks from 0.48 to maybe around 0.52. Look at this right over here. So 0.48 to 0.52, a little bit of a resistance, right? Up, down. Not much of a move, just a sideways movement. And finally, the past 2 days, you can see that we actually are attempting to break that 0.52 to push towards our 5.5 target, right? So that's a good thing. It shows that buyers are kind of prepared to take it higher to the next phase. So upside targets perhaps could be raised all the way to maybe around that 60 cents, 0.60. That could be the next upside targets whereby we might see some profit taking coming back. So right now, I would say that if you have got in right over here, stop loss could be raised all the way from below 4.3, maybe all the way to below 4.7, and now stop loss could be maybe around that 0.49 to 50 cents just to protect the downside. So these are some of the steps we can take to protect our downside while giving it more space to run it higher towards our target around that 60 cents level. Yep, so this is one of the stocks that you can put in your watch list. My take is that anything above that 0.52 or above 0.50 support level, the uptrend looks intact. We could potentially even break the 60 cents to hit even higher. So what we want to see is that in a stock that's in an uptrend, we want to see some sideways consolidation, like what we are seeing right over here. You can see we consolidated for 2 weeks, we consolidated for about 2 to 3 months. and we break a key resistance and it starts to push even higher. So that's like what we call a healthy uptrend. If you can do that, maybe below 60 cents for a couple of weeks, and we break 60 cents, that could be a new phase up. Again, that's where targets may even be revised even higher. So how were we alerted to Dynamac in the first place? So this is Dynamac on my 1GT, one good trend system, based on my proven one good trend strategy. So here's where we actually had a couple of bullish and even bearish, I would say, signals since last year. So you can see that since last year, it was not all that rosy. We had a couple of bearish, look at these red arrow bearish signals. It just starts going down, down, down in October, November, rebounded a little bit, and then we had another bearish signal coming out in January this year, started to hit down, right? But somewhere around February, you can see we actually had a bullish signal. It's a kind of like green arrow pointing up, based on my one good trend proven strategy, started to push up. Bearish signals came out, and this is where we are right now, somewhere above 50 cents. And I mentioned that, we actually had a couple of bullish signals over the past few weeks. So the first one would be at May, 27th of May, another one on the 21st of June. So that was actually just when or before it broke that very key, 44, 45 cents resistance that I've mentioned about. So right, before we broke it, you can see we had a bullish signal, pump, right? This was the day we broke it, and now we have headed even higher. So that's why we were alerted into this company in the first place, because we have a system that kind of like alerts us to it and also guides us on entry and exit. So if we were to see, as I mentioned, right now targets can be potentially revised to like about 60 cents, and if we were to see like a bearish signal coming out, like a red arrow coming out again, that could guide us to take some profit to get up, because that's where we may see some weakness coming back. Okay, so that was the first Singapore stock like share view, whereby it has been watch this over the past couple of weeks, and there could potentially be more upside. You might want to put it in your watch list as well. So let's move on to the second Singapore stock I'll share with you today. And by the way, guys, if you found some value so far, I would appreciate you can give me a like, smash the subscribe button, the follow button, so that you will not miss out on any videos like this, right? And the key is that if you want to get some of these ideas, some of the top Singapore ideas much faster by WhatsApp live daily, right, for free, make sure you click on the link below this video or around this video. I'll put the link there, and find out how you can become a VIP client of mine in Phillip Securities, whereby I'm a broker. And that's some of the services we provide to our clients. Besides the private trainings, you get some top ideas daily by WhatsApp and some updates as well, right? Especially if you have a trading account in Singapore. I mean, you're trading, you're buying some stocks, but you don't get any service from your own broker. I mean, you don't get anybody who WhatsApp you, who send you any ideas or videos or training, or you don't even know who the person is. It's just like a hotline. Check it out, right? Make sure you come on board as a VIP client of mine in Phillip Securities. Joey here, the link is right below this video, right? So let's move on to the second stock I'll share with you today, and that would be Centurion. So this stock came with my watch list over the past few months, and just, I would say, early of June, right? You can see that we actually attempted to break this resistance at about 0.55 to 0.56 right over here, and that was where we took a screenshot. Of course, upside targets were revised higher all the way to about 65 cents, about 14% up. Like that was like in early of June. So let's move on into where we are right now. And of course, for this as well, clients were alerted as well by WhatsApp, as I mentioned. If you want to get some of these ideas much faster than the time it takes to produce a video like this, to edit it and all that, check it out. The link is right below. So let's dive into where we are right now for Centurion and see whether have we gone higher, all right? And if we have, what are some of the new support levels? What are some of the new targets that may have came out over the past few weeks? Okay, so this is Centurion today on the 24th of July at about 0.625. So I mentioned, right, just about a month back, slightly early of June, we kind of attempted to break that 0.5655 level right over here. That was where we did a screenshot. Upside targets was put all the way to about 0.65. So we are at about 0.625 right now. You can see we have gone up a little bit higher, but we're still below that target. So this target is still on track, right? We might potentially see some, I would say, selling, all right, I would say near that 0.65 resistance. But let's take a look at what could be the new support level that came out. So after breaking this 0.55 to 56, that would be like the new support level. So we can like turn this to a green color line. So green color would be what we call a horizontal support level. But it seems like over the past 3 weeks to 2 weeks, we may have found a higher support, and maybe right over here, because there was a bit of a resistance as well, about 60 cents. You can see 60 cents was where we consolidated for a week plus, right? Week plus somewhere in end of June or early of July. And finally, right, somewhere around 15th of July, just last week, we broke above this 60 cents. So not even like 55 would be the support. I think right now 60 cents would be a higher support that would have been found. And you can see that it also coincides with what we call the 20 days moving average. So this 20 days moving average kind of represents the short-term trend. And if prices were to stay above this green line, this 20 days moving average line, and this green line were to continue to slope upwards, well, the short-term trend still remains intact in terms of the upwards direction. So you can see for Centurion, right, this green line was pretty much flat when we were consolidating somewhere in March and April, but somewhere around like end of April, mid-April, the green line, the 20 days moving average, started to point up with prices above it. And all this while, it has been sloping up all the way until now. So that's the reason why this stock came into our watch list. And of course, the uptrend is still intact. So right now, above 60 cents with the 20 days moving average line still pointing up, I think it still looks good. I think the uptrend looks intact in terms of the short-term uptrend. What about the longer term uptrend? Well, for the longer term uptrend, we're going to look at what we call the 100 days moving average and the 200 days moving average. So that's where we look at what we call the red and the blue line. So 100 days moving average would be the red line, the 200 days moving average would be the blue line. So you see both of them are pointing up. In fact, they've been up since last year. I would say since like July last year. Very gentle uptrend in the longer term. Wow, the short term trend was like a bit of sideways, maybe a little bit of down, and then over the past 2-3 months started to point up pretty aggressively. All right, so this is Centurion. I think right now a potential entry could be anything on dips maybe to near 60 cents, 61, 62. I'm not too sure exactly whether it will go back down for you to buy, but I think anything above 60 cents support, it looks pretty good all the way to that 65 cents. So it's like a 60 cents to 65 cents, a 5 cents range, about 7% upside. Of course, if that 65 cents resistance will be broken, we may raise our targets higher, maybe all the way to around that 70 cents. So this is Centurion, one of the stocks that have came to our watch list over the past few months because the uptrend is intact. We broke certain key resistance level, and that's where we've gone to a new higher phase whereby targets is raised. So did we have any bullish signals on my 1GT system for Centurion? Well, the answer is yes. That's the reason why we got alerted as well. So you can see that somewhere around like March, 25th of March, we got a green arrow pointing up. So 1GT bullish signal. You can see after a week, started to push up a little bit, got an exit. Another bullish signal came out in May, 14th of May, went all the way up, got an exit. And this is the most recent one, somewhere on the 12th of July. We got a bullish signal. You see it has gone up a little bit since then. So looks pretty good, right? There's no bearish signal coming out, no red arrow coming out. If that happens, then we might see a bit of a weakness in the short term. But so far, so good. I think the uptrend looks intact in the longer term, like I mentioned. And we had this bullish signal that is still playing out right now. Anything above 60 cents, as I say, it still looks pretty bullish. So there we have it, guys. These are the two Singapore stocks that you can potentially put in your watch list for more upside. It has been in our watch list over the past couple of months, and it has made out some gains, so why not share with you? And as I mentioned, right, if you want to get some of those ideas much faster by WhatsApp Live daily, as it happens, right, faster than the time it takes to record a video like this, to plan it, to edit it, and all that, to upload it, make sure you check out how to become a VIP client of mine in Phillip Securities. There is zero. There's no additional charge whatsoever. All right, you pretty much pay the same as whatever you're paying when you're trading anyway. All right, so it doesn't matter. All right, essentially there's no additional charge once you're a VIP client of mine, and that's where we add you to this exclusive private WhatsApp broadcast whereby we share some of those ideas, top ideas daily. All right, and you get it much faster than the time you see a video like this. So Joey here. Thank you so much for watching. I look forward to see you in the next video. Do check out these two stocks. I'll see you soon.